Hey, what's up everyone? It's Priyank and welcome back to the channel. Today we're diving deep into the world of stock research. Investing in the stock market can feel like navigating a maze blindfolded. But here's the thing, you don't need to be a Wall Street whiz to make smart investment decisions. This video is your comprehensive guide to researching and analyzing stocks before you invest a single dollar. We're breaking down the entire process into easy-to-understand steps, giving you the tools and knowledge you need to become a confident investor. So, if you're ready to stop feeling overwhelmed and start making informed investment decisions, grab your notepad, buckle up, and let's get started. Before you even think about looking at a stock chart, you need to ask yourself, why am I investing in the first place? Are you trying to save for retirement, a down payment on a house, your kid's college fund? Defining your financial goals is crucial because it directly impacts your investment strategy. Next up, you gotta figure out your risk tolerance. How much of a roller coaster ride can your stomach handle? Are you comfortable with potentially losing money in the short term for potential long-term gains, or do you prefer more stable, lower-risk investments? Your time horizon also plays a major role. How long do you plan on keeping your money invested? Once you've got a handle on your goals, risk tolerance, and time horizon, you can start building a diversified investment portfolio tailored to you. Now it's time to put on your detective hat and dig into a company's financials. Think of it like this. You wouldn't buy a used car without checking under the hood, right? Same goes for stocks. First up, we've got the financial statements, the income statement, balance sheet, and cash flow statement. The income statement tells you how much money the company is making, or losing, while the balance sheet shows you what the company owns and owes. Don't forget to check out the cash flow statement. This one's crucial because it shows you how much cash the company is actually generating from its operations. You'll find all these juicy details in the company's annual report, 10K, and quarterly reports, 10Q, which are publicly available. There are tons of resources online that can help you understand how to read and interpret financial statements. The more you understand a company's financial history, the better equipped you'll be to make informed investment decisions. Alright, now that you've got a handle on the basics of financial statements, let's dive into some key financial metrics that every investor should know. These are the numbers that can help you determine whether a stock is potentially undervalued, overvalued, or just right. First up, we've got earnings per share, or EPS. This tells you how much profit a company is making for each outstanding share of stock. Generally, you want to see a company's EPS growing over time. Next, let's talk about the price-to-earnings ratio, or PE ratio. This metric compares a company's stock price to its earnings per share and gives you an idea of how much investors are willing to pay for each dollar of earnings. The price-to-book ratio, or PB ratio, is another important metric. This one compares a company's stock price to its book value, which is essentially its net worth. Don't forget about dividends. The dividend yield tells you how much cash a company pays out in dividends each year relative to its stock price. Alright, we've crunched some numbers, but remember, investing isn't just about analyzing spreadsheets, it's also about understanding the business behind those numbers. What does the company actually do? How do they make money? Who are their customers? You want to invest in companies that are relevant today and have a bright future ahead. Look for companies with a strong competitive advantage. This could be anything from a powerful brand to a unique technology or a loyal customer base. Market share is another important factor to consider. How much of the pie does the company control? Remember, you're not just buying a stock, you're buying a piece of a business. Investing is like a horse race, and just like in any race, it's not enough to just look at your own horse. You need to size up the competition. Start by researching the overall industry trends. Is the industry growing or shrinking? What are the major drivers of growth? Are there any technological advancements or regulatory changes that could impact the industry? Identify the company's key competitors. Who are they? What are their strengths and weaknesses? If a company is operating in a highly competitive industry with razor-thin margins, it's going to be tougher for them to generate sustainable profits. Remember, knowledge is power, and the more you know about the industry, the better equipped you'll be to make informed investment decisions. Listen, investing isn't just about numbers and spreadsheets. Remember, at the end of the day, companies are run by people. And those people, the management team, can make or break a company's success. When you're researching a company, take the time to learn about the management team's track record. What's their experience? Have they successfully navigated the company through tough times? Do they have a clear vision for the future? Company culture is also crucial. A positive and supportive company culture can attract and retain top talent, leading to innovation and growth. On the other hand, a toxic company culture can be a major red flag. Remember, a company is only as good as the people who work there. Alright, now let's dive into the world of technical analysis. This is where we analyze price charts, trading volumes, and various indicators to identify trends and potential trading opportunities. Think of technical analysis like reading the tea leaves of the stock market. One of the most basic tools in technical analysis is the moving average. This helps smooth out price fluctuations and identify the overall trend of a stock. Another popular indicator is the Relative Strength Index, or RSI, which measures the magnitude of recent price changes to evaluate overbought or oversold conditions. Remember, technical analysis is just one piece of the puzzle, but it can be a valuable tool to add to your investing toolkit. The stock market doesn't exist in a vacuum. It's constantly influenced by news events, economic data, and global macro trends. Make it a habit to follow financial news sources, read industry publications, and keep an eye on economic calendars. Pay attention to things like interest rate decisions, inflation data, and geopolitical events. These factors can all have a significant impact on the stock market. Set up Google alerts for the companies you're invested in so you'll be notified of any major announcements, earnings releases, or other news that could move the stock price. The more informed you are, the better equipped you'll be to make smart investment decisions. Alright, now it's time to talk about valuation. How do you determine what a stock is actually worth? One of the most common methods is called discounted cash flow, or DCF analysis. DCF analysis is all about projecting a company's future cash flows and then discounting them back to the present value using a discount rate. This helps you determine the intrinsic value of a company. Another approach is comparable company analysis. This involves comparing the valuation of the company you're analyzing to the valuation of similar companies in the same industry. By using a combination of different valuation methods, you can get a better sense of whether a stock is potentially undervalued or overvalued. Alright, you've done your research, you've analyzed the financials, you've considered the industry, and you've even attempted to value the company. Now comes the moment of truth, making the investment decision. Remember, investing isn't about trying to time the market perfectly. It's about finding great companies with solid fundamentals and holding on to them for the long term. Once you've made the investment, don't just forget about it. Keep an eye on the company's performance, track its financials, and stay up to date on any news or events that could impact the stock price. If your investment thesis changes, or if the company's performance deteriorates, don't be afraid to reevaluate your position and consider selling. Investing is a marathon, not a sprint. Once you've built your portfolio, it's important to monitor your investments regularly and make adjustments as needed. Think of it like tending to a garden. You need to water your plants, pull the weeds, and make sure they're getting enough sunlight. Review your portfolio at least once a quarter, or even more frequently if you have the time. Check how your investments are performing, read through company earnings reports, and stay updated on any industry news or events. A company that was once a great investment might not stay that way forever. If you're no longer confident in a particular investment, don't be afraid to sell it and reallocate your capital to something else. By staying informed, being patient, and making smart decisions, you can increase your chances of achieving your financial goals. So there you have it, a comprehensive step-by-step guide to researching and analyzing stocks like a pro. Remember, investing in the stock market doesn't have to be complicated or intimidating. By following these steps and continually educating yourself, you can improve your chances of making successful investments. Don't be afraid to start small and gradually increase your knowledge and experience over time. The most important thing is to take action and begin your investing journey. Thanks for watching, and don't forget to like, subscribe, and hit the notification bell for more investment tips and guides. Until next time, happy investing.